Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about PubMatic. PubMatic is an interesting company in the digital advertising space, and we're going to talk about its growth rates and its guidance. We're going to talk about some of the uncertainty facing the stock, and then we're going to talk about its valuation. So let's just jump right in. So the big thing here is the elephant in the room, right? So the first half of 21, for H1 21, the company's been growing very, very fast, despite the difficult comps with the same time a year ago. Now, if you look forward to this, to the next half of 21, for Q3 and particularly for Q4, you can see here in the graph that for Q4 the company is expected to grow at 10% year over year. So that's a very, very low growth rate for a company that was growing very, very fast, coming out of Q3 at 88%. So there is just significant deceleration as the year progresses. And this just begs the question, why is there such a marked deceleration? The company says, okay, we're comping a difficult Q4 last year. And to appease investors, they've come out and they said that we'll give you guidance for 2022. So for 2022, PubMatic is expected to grow at 25%. So that's a reasonable growth rate for a company in the digital advertising space. And it really, is a company that is outpacing the rest of the digital advertising space. So I think that, yes, Q4 might not be kind of, where we want to be at, but there's enough here to really attract investors. The other thing I want to talk about is that PubMatic is actually quite profitable. So they're guiding, together with their guidance, to be up 25% year over year. Next year, they're saying that we're going to have approximately 30% operating margins. So it's really, it's a company, it's a solid company, it's a small cap company that's doing all the right moves. PubMatic also says that, they are able to compete in this space because they have a lot of independence, and that their infrastructure provides them with the fixed costs so that they can leverage that top line. So that the stronger the top line grows, that really starts falling to the bottom line. So there is a lot here to be attracted about this small cap company. The one metric that stood out for me in this quarter's in Q2 results is that for the trailing 12 months, their net retention rate reached 150%. This compares to the previous 12 months that ended June 2020, where it's 107%. So at 150%, they're really upselling significantly to their customer base, and it is a very strong metric. In the SaaS business, if you're reaching approximately 120%, people are like, oh, that's a good company. To reach 150% is a very, very sticky business. So all this, and the company is priced at approximately 6 times to 7 times forward sales. This compares slightly with Magnite, that's approximately priced at the same multiple here. What I would say is that Magnite reports their revenues on a gross metric. So that means that Magnite's revenues include traffic acquisition costs, whereas PubMatic is already reporting, like the Trade Desk, at a net margin. So the margins from PubMatic are much higher. It's a more profitable company by approximately 5% than Magnite, yet it trades ever so slightly cheaper. So I don't think it's very expensive for what it is. So why is the stock cheap? Well, investors right now are kind of unsure of how things are going to play out in a cookieless world. So all these digital advertising companies right now, apart from let's say the Trade Desk, are all trading at single-digit forward sales. And if you think about it, it's really because the Trade Desk is so big that investors are thinking to themselves, okay, whatever's going to come out of the cookieless environment, it's really about that the Trade Desk has this unified 2.0 offering of this open platform that investors are thinking to themselves, okay, whatever's going to come out of it, it's going to really be able to manage this scenario quite well. So in any case, I hope you found this video useful. I'll see you next time.